The following is a presentation of TFNN. Live at TFNN, The Money Masters. Now, your Money Masters, Tom O'Brien and Steve Rhodes.
Welcome, folks. Steve Rhodes, Tom O'Brien. Appreciate all you tigers and tigresses growling and prowling with us out here. Right now, we get the Dow Industrials up 11, Nasdaq's up 9, S&Ps are up 3.5. We have gold up 3, silver is down 6 cents. Bonds, they're flat at 151.17. Those babies, folks, want to move big time. And, of course, King Dollar down 23 ticks at 81.07. Euro at 127.18. The yen's at 79.40. Our phone number is 877-927-6648. Let's call, folks. Want to know what's going on in your world. Steve Rhodes, what's going on, brother?
Hey, happy belated birthday, my
Thanks
friend.
so much. Appreciate it.
Good. We celebrated for you on Friday. I don't know if anybody saved you any cake in the office.
No, man, I had plenty of it. No doubt, man. No doubt. Well, I'll tell you, the market was celebrating, huh?
Oh, my goodness. Hey, and, it's Veterans Day, so, on there, I certainly want to say how much gratitude I have for all the service that, you provided to our country and just all the service you continue to provide to each of us out there. So.
Yeah, we appreciate that. And this afternoon, folks, at the 5:20 mark, we're gonna have a Marine Corps mother on. It's gonna be beautiful, mother and a wife actually. So stay tuned up there. We're gonna,
Oh, that's great.
Yeah, the mothers keep it all together. Let me tell you something.
Oh, that's good. That's
no
good.
doubt.
So your thoughts on these markets here as they attempt to maybe set up the B to a C leg of further move
well,
down?
this is what you have, folks, and this is what's really dangerous. Let me tell you. What you have is this. The market has done 2 multiple ABC structures off the high, right to the key, and when that happens, let me tell you, right now we have a 100-point A to B structure on the way down. So what you had is this. We had the S&P hit the number, the NASDAQ hit the number, the Dow extended 100 points, the small caps extended 5, but 5, small cap points is a lot, folks. Yeah. So what you have, the conviction's there, and it's there big time. Now, the S&P, the larger one, is a 100-point A to B structure, which will get you right down, I suspect, to the 1,300 S&P, 1,300, 1282 to 1266. Yeah. So it's a big one. Now somehow, some way, we'll probably get a bounce to this, I suspect, 1403. And it's starting today, and you get anemic volume, So that's the smaller part of it. Now, the larger part, folks, when we take a look at this, Steve, I mean, what's screaming out here, folks, is, well, here, if I put up the S&P, just the SPY for the SPY, and we'll put this on a weekly, what you're going to see that is sticking out like a sore thumb is the lows that were established all the way of October of 2011. Yes, that's screaming, okay? Yeah. And I think it's game. I'd say it's game. Now, what you definitely have is that the SPY were at 138. Now, as you get into 1,300 S&P, that's going to be hard to get into. And the reason being, folks, is that when we come down in August, September, and October of 2011, that's where we started. So the top of that will, should have some nice support. But we'll see. We'll see how it comes down. If we build some cars here, which I expect, once we get this B2C in place, game is up. So when I say game is up, too, Steve, what's happening here? So check this out. When we take a look at the Dow, folks, what money managers are going to come down to is this, okay? If we put this back, let's just put this back. We'll put this back 2 years, and I just got to show you year to year. So let's see, January. Okay, so right now, we started off the year in the Dow. This is right there. So you're talking 12,000. There it is right there. So you're talking 12,512. Now, 4 weeks ago, the Dow was up 6%. Big deal, right? 8%, whatever that is. Well, guess what, folks? Right now, let's call it a toss-up. Maybe you're up 1%. Money managers in particular, they're going to be saying, oh, man, I need out, okay? Because the ones that didn't sell out are going to say, oh, great. Between their fees and being up 6%, well, maybe someone's up, whatever that percentage is going to be. But let me tell you something. We have plenty of time to go back into the negative before the end of the year.
Yes, absolutely. Absolutely.
And that's just going to, that's just going to accelerate selling. There's no two ways about it. So,
and do you think they can talk a little bit more or try to use the word fiscal cliff a little bit more often?
Oh, I'm telling you, man. It's the thing that's amazing is that it's the whole thing's a joke. If you can see anything, folks, just politics in general is a joke. I mean, there's no two ways about it. I heard this guy on this morning, and I liked what I heard. I can tell you this, because, see, my take on it is, folks, is that every time that you hear that companies won't do something, that, folks, is absolutely just insane, okay? And I don't believe it, okay, for a second. The reason I don't believe it is that when you run a company, you can't stand still. There's no way. The only way you can let's put it this way, the only way you can stand still if you're fat, rich, and happy. And you get the right DNA. You're in the Lucky Gene Club or something. In business,
no, you can't. I say even then you can't. And so that's a great lead-in just to this Apple chart that I worked on over the weekend that I included, in my newsletter for my clients this morning.
Yes.
And what I've got up here on my screen is I've got a chart of Apple, and it's a weekly chart of Apple. Now, Apple is the black line that shows up on my chart here.
Okay.
Now, what I did, Tom, was I went back and I took a look at Microsoft when it was making its peak, and it peaked on December 30th, 1999.
Oh, wow.
When it made a price point of $53.25. What I did, and the red line here on my chart is Microsoft. I just simply moved Microsoft all the way forward to match up the two peaks. And what is uncanny is actually, if you go back on, to the early part 2009 or what have you, and again, it's more of the direction, so you're not paying attention to it overlaying exactly on price.
Okay.
But it has a pretty good correlation of up and down moves. And if you take a look at what's really odd, what's really interesting, is that the first move down in Microsoft, really, as a percentage term and everything else, was very similar to the move down that we just saw in Apple. And what Microsoft did, it had one more move up. It did a 0.786 retracement off of the total first leg down, and that was it. And the reason is I don't have this chart up here, but just simply because of the weighting structure inside the NDX, you don't want to say that it's just one chart or one stock that is going to pull the markets down. But, Microsoft had a big influence during the tech bubble in the, in that because of the weighting structure inside it. Apple's got a big weighting structure inside there. And so it's just, I think it really, so I don't think even if you're fat, dumb, and happy and you can rest on your laurels like Apple, that you can afford to do it, ever.
No, I agree. There's no doubt. There's no doubt. And what happens here, folks, is that the amount of managers that own Apple, okay, bottom line is that if they take it off the table, great. Okay, they take it off the table. They don't take it off the table, they're in trouble. And then what ends up happening is that as they start selling down, they got to sell something else, and selling just begets selling. That's
exactly.
There's no two ways. And The amazing part, Steve and I, we talk about this a lot. It's like, okay, so you're up tenfold, and you think you're going to go up another tenfold. What it absolutely blows my mind. This is what you got to get educated and wrap your head around, folks. Okay, nothing goes up forever, nothing goes down forever. It's not the end of the world, and it's not bad or good. I mean, it's just the way it is. We can take the best companies in the world, and if you're going to go up 1,000%, well, do you think you're going to go up another 1,000% after that? You might. Okay, but it's not a given, and the probability goes down dramatically that would happen.
Absolutely. And so in the case of Apple, and when I take a look at that, part of the reason why I was also looking at that is, when I take a look at the New York Stock Exchange, which is a better overall breadth of the marketplace, its pullback has not been that bad at all. So it has not, the New York Stock Exchange index itself has not given itself up, not like the Qs did. So it does show that you've got a smaller number of stocks. Now, big stocks, IBM, Google, Apple, and so forth, that certainly are, because of the heavy weighting structure within inside it, are really pulling it down. But so I really think that it is, quite frankly, it's almost as simple as watching Apple to see if there's any kind of bullish reversal sign. And when we see a sign there, then I say the market starts to set up that B to C of the larger A to B leg down. Whether it's going to retrace back to the 0.786 area, it'll give us volume will give us an indication. But you're absolutely right. If you're a money manager and you are sitting, and we know so many people are sitting in Apple, I don't think they'll get out of Apple entirely, but you got to be cautious. I think you got to really be cautious.
Well, no, you do. And see, this is where the market deviance is, folks. Is that, and Steve and I talked about this before, there is absolutely huge amount of people that absolutely have got rewarded on a continual basis for taking deep retracements in Apple. And that's where, you always hear me say we're all geniuses in a bull market. Well, when it's a bull market, that's what happens. But guess what? Well, in Apple's case, okay, you had a situation from 2009, Apple was at $84, all the way up to $705. Well, you're going to change at some point. And that's, and see, what happens, and this is wild, Steve, is that in that context, when you do get rewarded like that, they can make their own, and I can understand that, calisthenic in their head, saying, hey, I took this retracement field, boy, I guess it doubled again. Well, at some point it doesn't. And that's where, when Steve and I always talk about, folks, money management comes into it. Because what you have here is that in a matter of 2 months, Apple has just come back to March of 2012. So.
And at this stage, anybody who has been buying Apple on the way down, they're not getting that same reward that they were used to getting.
Great point, man. Great point. Because
that all of a sudden starts to make, now you're in and you're in a losing position, even on your current, and you've got to be saying, okay, what do I do? The more difficult question for all these funds, because if you took a look at what the fund ownership of Apple is, how are they going to get out?
Yeah, the doors. Let me tell you something, folks. You can have the best Marvin doors in the world. You're not going to get out. You're not going to get out on time. There's no two ways about it. And there's big numbers. And, when you start talking about top to bottom out here, you're talking about hundreds of millions of shares. Well, let's see if we take a look. Oh yeah, oh my God, It's big, man. And I can tell you, this morning, Steve. Now that's on the technical basis, on the fundamental basis, folks. Apple, to me, when I heard this morning that Apple and HTC made a deal this morning.
Yes.
They got a heads up. Cook's got a heads up saying, uh-oh, we better start moving quick and start taking care of our business versus going after other companies.
Good point.
They just made a 10-year deal, folks. Steve Rhodes, Tom O'Brien. All you Tigers and Targets, we appreciate you being out here with us. We ended out right now. Flat, Nasdaq's up 5, S&Ps are up $1.50. We're going to be right back.
What type of investor are you? Conservative, moderate, or aggressive? No matter your investor personality, your overall portfolio should reflect your financial goals, time horizon, and your risk tolerance. Help ensure your portfolio is appropriately invested with an asset allocation plan from Morgan Stanley Wealth Management. Simply picking the right stocks is not enough. Research has shown that choosing the right proportions of stocks, bonds, and cash is essential to the success of your long-term investments. Morgan Stanley believes a carefully selected portfolio can lower volatility and increase investment return potential. Find out about what an asset allocation and a Morgan Stanley Wealth Management financial advisor can do for you. Call Angela O'Brien, First Vice President and Financial Planner of the Clearwater, Florida branch at 727-441-6108 today to discuss your personal financial needs. Asset allocation does not assure a profit or protect against loss in declining financial markets. Investments and services are offered through Morgan Stanley Wealth Management, LLC. Member SIPC.
with the launch of Tiger TV. TFNN has brought our programming to the next level. With Tiger TV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, Steve Rhodes, Basil Chapman, Ken Shreve, David White, Larry Pesavento, Victor Jones, or Carol Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV, then visit TFNN.com and see what you're missing.
You take a hands-on approach to managing your investment strategy. You're always looking for the next trading opportunity to magnify your perspective. Direction Shares connects sophisticated traders with a powerful array of ETFs from a wide range of asset classes. The markets may go up and down, and you want tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor Foresight Fund Services, LLC.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com.
Millionaires are made every day. The fact is, living your dreams is possible. Someone, somewhere is going to get rich. My recommendation is, let that be you. Each day, someone is making the decision to better themselves and creating a plan to fulfill their financial dreams. Let that be you. The key to turning dreams into reality is to take massive action. Let that be you. I'm Steve Rhodes, co-host of the Money Master Show with Tom O'Brien, seen daily at TFNN, and I can help you with your journey to great wealth. I'll show you how to create the ultimate financial edge, a set of tools, insights, and strategies that are part of my daily newsletter service, Mastering Probability. You'll have direct access to me by phone, email, and my private library of trading and investing secrets for 30 days with an unconditional money-back guarantee. I'll take your trading to the next level. Click on my name, Steve Rhodes, on the homepage at TFNN.com and turn your dreams into reality. Mastering Probability, folks. Let that be you.
This segment is brought to you by Goldfields. For more information, just click the Goldfields banner on the front page of TFNN.com.
Welcome back, folks. Steve Rhodes, Tom O'Brien. Appreciate you growling and prowling out here with us. Right now, we up the Dow's flat, Nasdaq's up 3, S&Ps are up $1.50. And, hey, Steve, when we talk about, let me tell you, Groupon had it, folks, okay? Pretty amazing, you know. The Wall Street brings out an IPO, takes everyone to the cleaners, and folks, you're going to see Groupon out of business. Period. Well, let's put it this way. Yeah, they're going to be BK. It's just amazing. I mean, and what's going to be really wild is watching. So technically, this has been saying it for a while. We'll see how this shakes out fundamentally, though, folks, because it just when it broke the B point, the initial B point in August, it was going BK, but now it just did another one. So it's like, you can't wait to hear what their excuse is next, Yeah,
and who was buying all that stock on? Who was buying it on Friday?
It's
at $2. Boy, somebody was believing.
Oh, hey, listen, let's go over to Facebook. You talk about taking people to the cleaners. Here's another one. Facebook, folks. Okay, all the hype, the whole ball of wax. Okay, it pops up there. What we're talking all about 10 trading days ago, people buying at $24. This is an ABC down to $13. We're back at 19.
Yeah, and you've got all those folks that had their shares free up. They've been watching this stock. At one stage they were twice as wealthy, at least in their minds, than they certainly are today. You got the holidays coming. You got the talks of the fiscal cliff. Who wouldn't?
Well, and you know what you have is that even 4 days ago, you know, whoever had the stock was $2.69 richer.
Yeah,
which, in that case, folks, is huge amounts of money. You know?
Yeah.
Tell you,
absolutely.
The whole thing is just amazing. Hewlett Packard. You know, it's, folks, what happens, and this is something that you want to wrap your head around a bit. What I've seen is this. When you actually have a downdraft and a large one that's starting, okay, because you got to remember something. We have been going up for, what, a year and a half, okay? Maybe longer. Here, let me look at this for a second. So if we put this back on a monthly, yeah, we've been going up since, well, you can make it longer than that. The last leg, October of 2011. So,
yes,
so
right.
I guess it's a full year, okay? Yeah. You know, but you can really make the case you've been going up since 2009. But anyway, my point is this. When you see, whether it's the Groupons, whether it's the Facebooks, but larger picture, like a Hewlett Packard, when you see this type of destruction, that is also a heads up that the leg not only is in progress, okay, but you'll see an acceleration, because the shocker in all these large legs down is that you have companies that you never thought could get in real trouble. And Hewlett Packard is the...
Well, it's trading at 1995 levels.
Yeah, and Hewlett Packard's the essence of it. There's, you know, RIM, you know, is different. You know, RIM, it was a, you know, one-trick pony anyway, okay?
Sure.
Hewlett Packard, no way. But guess what? Hewlett Packard, you're going to see more restructuring on Hewlett Packard. You know, we are at $13 right now. She's on her way to $10.75. And the way that she came down last month is telling me that, hey, you know, $5 is game.
Big volume last month. Big volume.
Oh, my God.
700 million shares.
Huge. Unbelievable.
And closed at the bottom of it, at the low of its trading session.
Exactly.
Yeah.
Unreal. Let's go to our man, Rick from British Columbia. Hey, Rick, what's going on, brother?
How's it going?
It's going great, man.
Were you buying real estate or were you on holidays over the last week?
See, I got it made. On November 9th's my birthday, then I get the Marine Corps birthday November 10th, and I get Veterans Day November 11th. So I always take off.
Oh, right on.
And let me tell you, folks, for all you folks, I know we have some Tigers that live in Charleston, South Carolina. Let me tell you something, folks. Charleston, South Carolina, you want to go to. Absolutely. That city, folks, is so dynamic. Let me tell you something. If you think that the United States of America is in trouble, if you think that the United States of America doesn't and won't rule the world for years, you go to Charleston, South Carolina. Or if you think that the next generation or the younger generations don't know what they're doing, you go down there. They have it all. You know, hey, Steve, it reminded me of Boston, okay, in 1980. And this is why, folks, okay, it got gentrified. And the amount of young people with strollers walking, oh, man, it was just so dynamite, man. It's happening big time. They got a huge Boeing plant they just put in there. But the place, the attitude, everything about it is absolutely fabulous.
A lot of history there, too, I would think.
Oh, a great amount of history. It was settled the same as Boston. Yeah, dynamite history, man.
Hey, I'm looking at the Qs, Tom. If you could put it on a 2-year weekly, it looks real clean.
Okay, you stay right there, folks. This is Rick from British Columbia, Steve Rhodes, Tom O'Brien. Appreciate you growling and prowling with us out here. We have the Dow Industrials flat, Nasdaq's up 3, S&Ps are up $1.50. We're going to be right back, folks.
You've heard Tom O'Brien on the air, and you've seen him on Tiger TV, as well as being featured as a regular CNBC guest and contributor, and now you can have access to his expert trading advice each morning through his daily trading newsletter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, gives traders, investors, and money managers a thorough strategy for trading stocks, options, and indices every market day. Market Insights comes out each market day before 9:30 a.m. and provides traders with Tom's daily commentary, opinion, and specific trade recommendations on the markets. Using advanced Fibonacci methods, volume indicators, Gartley patterns, candlestick charting, gaps, and market timing, Market Insights will give you specific trade recommendations including entry, stop, and exit prices. The summer is over and traders are back. Get your 2-week free trial to Market Insights today by visiting the front page of TFNN.com. If you're an investor looking for a great weekly investment newsletter, then now is the perfect time to try out Ken Shreve's Ultimate Growth Stocks. Every Tuesday, Ken breaks down multiple sectors in his weekly newsletter, Ultimate Growth Stocks, with a full in-depth report including specific trading recommendations within his model portfolio, charts, sector analysis, upcoming economic data, along with intra-week trading updates on newsletter positions whenever the market dictates. Right now, you can receive a full month, that's 30 days, to evaluate Ken's newsletter free of charge to see if it fits your trading plan. At less than $75 per month, Ken provides you with his expert trading advice that can pay for itself in no time. Take advantage of this great offer by signing up for a 30-day free trial to Ken Shreve's Ultimate Growth Stocks today. Don't let this offer pass you by. Visit the front page of TFNN.com and sign up now.
Daryl Martin coined the phrase diagnostic trading, and we're happy to announce that his diagnostic box spread analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Daryl Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
This segment is brought to you by Crocodile Gold. For more information, just click the Crocodile Gold banner on the front page of TFNN.com.
Welcome back, folks. We got Bank of America flat out there. We got Gilead Science. Let's get some action inside it. Up 10%, up $7, trading out at $72.85. Ford is down, up 9 cents. We got GE flat. We're talking with our man Rick from British Columbia. Okay, so what are we going to talk about here, Rick? The NDX?
Yeah, well, I was going to ask the NDX, but I think the cues for your Tigresses and Tigers and your viewers probably a little easier because it's not always easy to dig up that. I was actually going to talk about the NDX features, but the cues, you put it on a 3-year weekly, for example. I mentioned 2-year weekly, but 3-year.
Okay.
You see the real price, the high volume, the low in August of is around $50, and the high back in 2010 was $50, right? But that being said, see, we had an inverted head and shoulder on the right-hand side?
Yes.
Perfect, right?
Yeah.
I mean, to a T.
Right.
So now we're coming back to the neckline at 60, but it looks to me like, there's problems at 55. There's a gap at 56 and stuff like that. But anyway, I just thought I'd mention that to you.
Yeah, no, that's now. So what Rick's looking at, folks, is this, and this is pretty, isn't it? It really is pretty, man.
And you always come back to the neckline. That's usually the rule of a head and shoulder pattern. Right?
Yeah, and so it's really okay. So last week we came back with 238 million shares. You got to a low price point of 63.43. You're going into 296 million at a low of 60.85. Now, here's the key. This is the kicker, and there's no doubt. It's how we came down in that August 2011 area. So the highs of that are 58.82. So that's where the bounce should come in. And what you have here, folks, is that you're going to need a huge, even though we had a huge expansion of volume last week, you're going to need a lot more volume to crack into that deal. I suspect we're going to get it, but that's the lineup, And when you take a look, it's absolutely amazing, too, is that when you actually take a look at the structure of the channels on this, it lines up so good.
Well, Tom, and here's another one, and I'll leave you with this, okay? If you put oil, I got a 9-month, put a 1 year, 6 month really shows it. You got a beautiful head and shoulder pattern down to $75. But I don't think this market's I think this market's just gonna be so deviant, like the word you like to use all the time. Like, we could go to $75, and then we could rally with oil all the way to 85, 87 again. But anyway, back to the next one.
The consolidation right now, that's what the consolidation is. The bottom of it, $75, man.
Thanks a lot, man.
Okay, man. Have a great one. Have a safe one.
So Tom, while you were out painting Charleston, South Carolina, Sherwin-Williams was out painting as well. They had a acquisition this morning here, or that they announced. They're trading up about $4 and change. They went ahead and bought out a company in the, believe it or not, the paint business. We're just talking about the architectural paint business, but they bought out a company in Mexico. So I think they're just not bullish here in the U.S. They're getting bullish worldwide when it comes to housing. Now, this week, aren't you going to be out in the West Coast as well?
That's right. On Thursday, folks, I'm doing a presentation, a real estate presentation in San Jose at the San Jose Hilton. That's Thursday evening. And then Friday, I'm going to be in San Francisco at the Gold Show. And Saturday, folks, if you'd like to come, I'm going to be at the Marriott at the Tech Center in Denver, Colorado for a lunchtime presentation. And if you'd like to understand, if you're a accredited investor, folks, we opened a fund. It's Tiger Real Estate Opportunity Fund. You can come to our website at TFNN, right into breaking news. You can take a look at the white paper. You can hit the actual website and see exactly what we're doing. Yeah, it's amazing, Steve and folks. Let me tell you something. No matter where you live, this game is on, and it's on big. It's not on small. I can tell you how big it's on right now. Now, you got Sherwin-Williams going after it, and what everyone's trying to do is to position themselves, before bigger acceleration. The acceleration's already off the bottom, but before a larger one. And it has to do with free money. There's no doubt about that, okay? Free money, free cash flow. Steve, you know what I was looking at? And Steve knows this, folks, okay? So we're busy in Pinellas County, and believe me, in Pinellas County, we can stay as busy as we want. But I had already said to Steve, I says, about another 2 years, man, Spain and Ireland, the game. Well, guess what, folks? It's already happening in Ireland, big time. The money's coming in hand over fist into Dublin. Because Ireland crashed beyond belief also.
Yes.
And it's happening because it's free money. And it's happening also because what you do have is that, and, see, this is the best of all worlds. People believe that, the economy's not going forward. The economy's going forward. What blows my mind all the time, Steve, and you know this. What blows my mind, folks, you hear these people out saying that when they're getting interviewed, no, my company's doing good, but the economy's not doing good. Oh, really? So you got some kind of special gold stamp on your forehead that it's always just your company, it's no one else's.
Yeah. Well, look, there's no question, the unemployment that we've got out in the marketplace, is an issue out there. But the reality is, as we've been talking about, we're seeing with companies struggling to make the top line number, with the U.S. dollar index continuing to move higher. We know that that's just simply going to be a headwind for those companies. That's why you've got Sherwin-Williams. They're up at their highs. They're buying, and they're doing it for multiple of reasons out there. But you've got so that's going to be the headwind, is the strong U.S. dollar. You've got companies that are laying people off. Not hiring people big time. And so that's an area where people take a look at the market and they say, okay, things are maybe weak out there. But what what your white paper shows you, is there's never been a point in time in history when there's been more money, in essence, that's really is sitting on the sidelines, in cash, in bank accounts. So for those people that aren't struggling with the employment aspects, at some point in time, that cash is going to come out.
And let me tell you, what you see under that white paper, by the way, too, folks, is this, and you still don't hear enough about this, okay? You hear it on TFNN, but you still not hear it. The baby boomers were the biggest demographic out there. Well, guess what? They're not anymore, folks. The biggest demographic in the United States, that's right, is 30 years old to 13 years old. Okay? That acceleration, I saw it in Charleston. Let me tell you something. I saw these, I talked to a lot of kids down there, and you know what a lot of them did, Steve? So check this out. You had kids coming, well, the ones I talked to just happened to be, one was from Manhattan, right? He's 25 years old, so check this out. He's been there 3 years now. In 3 years, he's managed to come out of Manhattan, which, you know, he was in Brooklyn, actually.
Yeah.
Went down there, got a job, making money, already bought a house. Now, and picture this, folks. He's got a house, a 15-minute walk. Downtown is huge, okay? But he's downtown. Already owns a house, right? I mean, he's so psyched he can't see straight. And I'm looking, I'm saying to myself, look at this, man. It's happening, and it's happening big. And it has to do, there's no doubt, folks, that it has to do with, yeah, you might have to move, you might have to do this, you might have to do all those other things, but you know what? It's there, man. And
well, it's a convergence of price and inexpensive money coming together at the same time. You know, so you've had the big retracement in housing, and now you've got this this inexpensive money that's sitting on the sidelines, most likely for at least another couple of years out there.
Absolutely, and Tiger brings up a good point, folks. Okay, and what he says is this: he's a real one, not saddled with college debt and live with mom and dad. Okay, this got to be addressed, folks. Okay, now, is that real in certain places? Yes. Is that real across the country? No. Okay, I can tell you, coming from Boston, yeah, the poor people in Boston, you go to college up there, you're toasted and roasted. And next scandal, folks, no doubt is going to be the amount of college loans and the amount of tuition that goes up, okay? But guess what? That doesn't happen across the country. And if you're in Florida, you get, bright futures. You know, right. You're not strangled forever, okay? The kid in Brooklyn, well, guess what? He was smart enough. He didn't get strangled. He says, see you later. See you, don't want to be you. He took off. You can go to the Charleston College, $11,000 a year. That's not going to strangle you. So the amount and the deal about living with mom and dad, I don't, you know, in certain cities, yeah, but guess what? There's 300 million people in the United States, and that's not the way it's going. You know, so you know what's interesting, Steve, is that and you folks, you have to be aware of this. You gotta understand. Keep changing channels, okay? Because if you listen to the same.
That's for sure.
Deal, you're out of your mind, okay?
That's for sure.
You better broaden that horizon, okay? And the only way you can do that, let me tell you, and I'm a perfect example of that. Growing up in South Boston, I only knew 4 square blocks, and that's what happens in cities, okay? But let me tell you something. If you can get, you gotta broaden the horizon, man. And there's nothing wrong with being in your own space. But you better understand what the much larger picture is, because, you know, I mean, for years, I just thought that that's how it was.
Yeah, well, you know, you're absolutely right, and that's the beauty of, like, you traveling up to Charleston, you know, this weekend. You know, you're taking yourself just simply out of your existing space, seeing what's going on, either confirming or, oh, this is interesting, with regard to your thought process. You know, when it comes to real estate, still a lot of folks that are scared out there because so much of the talk about the fiscal cliff. So, yeah, you really should turn on a different channel. There should be something other than somebody selling fear out there.
No doubt. No doubt. And I guess on the fiscal cliff it's going to be hard to find any channel that's not talking about it.
So turn it to the music channel or something.
Well, you know what's so great? You know, this morning, this guy's from he was Pirelli Warburg. He was from a huge takeover firm. He says, hey, listen. He says, why don't you just start from the baseline that it's going to happen? He says, not that I want it to happen, but start from the baseline it's going to happen, and we work out from there. He says, what's the big deal? You know, and folks, yeah, none of us are going to like it, but guess what? If you're going to be alive and going to be in business and want to go forward, well, guess what? It's right in front of you. That's what it is. If it gets better, great. You know, so.
Absolutely.
It's wild, no doubt. So, hey, how was your weekend?
No, Oh, it was good. It was good, and so in honor of Veterans Day, I extended it an extra day for you.
That's a beautiful thing. Well, I think all the banks and the places are closed anyway, right?
Banks are closed. Absolutely, banks are closed. And to me, the biggest gift actually would be the market moving down today and tomorrow. And the reason is just simply if we take a look at, you've got a lot of activity in the skies. So we've got tomorrow is a new moon that's coming in.
Yeah.
So and I've got a chart up here on the screen.
Okay.
And the way that these lunar signals have worked, they've been mostly spot on with regard to the actual day of the event. And they certainly have marked short-term highs and lows. Since coming off of the June 4th level, the turn, if you include both the day of the actual event and the higher low that it had made, it's averaged anywhere between 4 days to the full 12-day trading cycle out there. So, what would be nice is that we see the market continue to move down, on lighter volume.
Yeah, and what you had here, folks, is that the intensity was last Wednesday. Okay, it contracted somewhat on Friday. Even you had some juice. There's no doubt, but that juice was going into the July 27th area where which we'll get a bounce out of it. So
yeah. And so we get a bounce, and then the question is going to be, what is that bounce? And as you were pointing out, it may only be at about the 1403-ish level, I suppose, inside the.
Yeah, listen, man, the last ABC down was a sideways move. That's that couldn't handle any price acceleration at all.
Yeah, exactly. So that that's what I'm looking for is a little bit of a bounce here, and then to set up that next leg down.
Yeah. Now, hey, listen, let's talk bonds, man. Larry needs his life jacket again.
That he does.
Right now, folks, we're at 151.22, and what's game here, we can go sideways for a bit. What's game here, though, is that 154.17. And let me tell you something. If it ever hits the 154.17, like we came up the last 3 days, this little baby, it'll build more cause. I don't expect it to to get over the first leg up, because that'd be 100% move or move.
Yes,
but that's setting up that those bonds want to get into higher price, lower yield. So.
And what they did, if you take a look, at the 30-year bond, it completed on Friday. It completed a 1-to-1 A to B equals CD up.
Right.
So, coming off of the swing point, let's say from September 17th as your A, and the September 28th as your B, and the C point being October 25th. So it's nice. It also completed the 1-to-1. It's also lining up with the possibility of setting up a bounce here. Setting up that B to C. So pull back nicely. And, it had wide price spread and conviction, on November 7th, November 8th out there for sure. So
folks, Steve, I just put this up. Now, check this out, folks. I put this on a weekly, and this is another monster ABC up. 136 is your A. Oh, man. 46. Okay, so it's 17 points. 44, 54, 64. We're going to 161, man. So check this out. What you have, folks, is this. That expansion last week was 148 to 152. This thing's going to blow this away, man.
Yeah, I think, which is amazing.
Yeah, what it is, and this is where the disconnect is. It's not a disconnect, folks. If you understand, it's just that the large companies have had it made with the dollar, from 121 down to 70 and 80. Bottom line, we're going the other way right now, and they have to basically change those business plans ASAP. Steve Rhodes, Tom O'Brien, you stay right there, folks. We're coming right back. We have the Dow down 11, NASDAQ is flat, S&Ps are flat also. Gold is up by 340. We're going to bring it back.
Are you looking for a precision edge in the market? Something that can stack the odds in your favor? Then look into Larry Pesavento's new trading newsletter, Patterns, Profits, and Peace of Mind. In each weekly issue, Larry explains what's going to happen in the markets based on the pattern he sees developing and gives you actionable trade ideas based on those patterns. Plus, you'll get his detailed analysis on a variety of markets and sectors, including stocks, treasury bonds, the gold market, oil, the dollar, the forex market, and more. And you'll get the Technical Corner segment, which is a short but powerful weekly training session on trading. You'll you'll get access to all the patterns Larry is seeing in the markets, plus the Astro Harmonics and powerful Bradley stock market model that Larry utilizes for less than $5 a day. An extremely potent combination that will give you just the edge you've been looking for. Try patterns, profits, and peace of mind absolutely free for 2 weeks. Go to tfnn.com and click on the free trial link at the top of the page. That's an $85 value, yours free when you register right now. Get Larry's patterns, profits, and peace of mind and get the edge you've been looking for.
In just December of last year, the price of gold was down over 10%. In today's highly volatile gold market, you need someone in your corner that understands the complex relationships that exist within the price of gold, as well as within a variety of gold equities. Whether it's the South African gold miners and knowing how the Rand-dollar relationship will affect their bottom line, or understanding how John Paulson's $5 billion trade in the GLD can move the market, Tom O'Brien gives you the direction you need to become a better trader each week in his newsletter, The Gold Report. With over 20 individual equities covered and almost another 20 on the potential watch list each week, in addition to covering the XAU, HUI, GLD, and dollar, The Gold Report is a great source for any trader that is looking to be diversified in today's volatile gold market. For your 30-day free trial to Tom O'Brien's Gold Report, log on to tfnn.com today. Don't miss out on this great offer. Act now. David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to tfnn.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
Let me tell you something, folks. I have people coming up to me saying, I just can't believe the amount of work that Steve does on his newsletter. And I says, I absolutely agree.
That is a recent clip from the Money Masters show that Tom and I do each day at TFNN. My newsletter service, Mastering Probability, is much, much more than a newsletter. Yes, it's outperformed the S&P 500 by 100% during the last 15 months. But more importantly, it's an extraordinary education, a roadmap for your success. And it's yours risk-free for the next 30 days. Just go to the homepage of tfnn.com and click on my name, Steve Rhodes, and then Mastering Probability, because everyone needs a success strategy. For most, it's a competitive edge, the will to win, the drive to overcome any obstacle. Whatever you call it, winners find a way. Find your way to Mastering Probability today, because your journey to extraordinary rewards is just one click away.
Catch Basil Chapman as he uses his Chapman Wave methodology to call the markets. The Tiger Technicians Hour, next on TFNN.
Welcome back, folks. Steve Rhodes, Tom O'Brien. Appreciate you growling and prowling out here with us. Don't forget, folks, you stay right there because we're going from Clearwater up to Newton, Massachusetts. We got Basil from 11 to 12. Larry Pesavento out in Tucson, Arizona, 12 to 1. Darryl Martin, Dallas, Texas, 1 to 2. David White back here. Ken Shreve out in California and back here, 4 to 6. Right now, market-wise, we have the Dow off 16, Nasdaq's down 3, S&Ps are flat. And let's go take a look at Coca-Cola for one of our tigresses out here. So let's see what we have here. We got Coca-Cola. Oh, look at this little thing. Oh, baby. Interesting. Okay, so she's been getting hit. She's got... So we're at 36, and we're on our way to 31. Yeah, I wouldn't be touching this right now. Okay, so at the top of where this is at, folks, is this. You get 35, 38's the first leg where, you know, you get some support. But I wouldn't be touching it, man, woman, because what you have is that you get into that with some juice, which we haven't, okay? That bottom is game, but what's really game on Coca-Cola is that 27, too. Man, this is intense, actually.
Yeah. It hasn't confirmed an A to B equals CD down on the daily, but it's still making one.
Yeah, and you know what? This is where the danger is, folks. You have a high with absolutely no volume. So when you have a high with no volume, it is big problems, and that's what you have. So you never want to see that happen, particularly in this case here. When I talk no volume, folks, your correlation is 648 million on a monthly versus making a high with 289. When you make a high, we're talking about 30% or 60% lighter. That's always problematic. And then we came off that high with some juice, you know. And oh, this one's a deviant one too. We came down on the month of September with 469 million shares, but you can see that the price didn't move that much. When I see that, that is always an indication that, oh man, okay, there's trouble coming at you. So, pretty wild.
Especially when you get below it.
Yeah, big time.
Especially. So some of the housing stocks, I guess Beazer was out with numbers maybe before the bell today. After the bell on Friday, I see they're getting knocked around a bit, down 12% here this morning. So some of the housing stocks starting to pull back a little bit. Looks like Beazer Homes has some pretty decent volume in it this morning, 2.7 million shares.
And what we'll see here, folks, this will be a dynamite gauge of the aspect of when this pullback is said and done. You know, the housing stocks have been the strongest period right across all the sectors, but they're going to pull back. Okay,
yes.
They're going to pull back, and when you see those babies pulling back into the area, like let's say Toll Brothers, you know, Toll Brothers went from $14 to $40. Okay, well, Toll Brothers wants to pull back to like 23. You're at 31. When you see that happen, you want to line that up. If it's on lighter volume, which at this point it is. Guess what? That is telling you that we're getting close to a bottom end of the larger indices also. And what normally happens is this. What you'll normally see is that they'll come into the lows swing point faster, but then they'll take off faster too. You know, it's going to be wild watching them the whole thing shake out because you know you still have an aspect. As you said a little bit earlier, Steve, that folks don't believe in. And let me tell you something, folks, okay? It's not only happening, but the cash flow is happening in it beyond belief, you know, beyond belief. So
Absolutely. Absolutely. So I think it's going to set up some good buys. You know, Lennar is actually holding up better than Toll Brothers.
No,
at this stage.
Yeah,
so,
no, there's no doubt it's going to set up. The Lennar, yeah, they're at 37 right now. Let's take a look at this baby.
Yeah, it's really done not too much on the pullback so far. So
no, she's got $30 in it. It's a beautiful thing.
Yep.
Folks, you stay right there. We got our man, Mr. Basil Chapman, coming up next. Larry, Darryl, David, Ken Shreve, and back here. Hey, Steve, have a great one, safe one. Great to be back with you.
You too. Happy Veterans Day to you.
Thanks, man. Have a great one, safe one, folks.